Good afternoon and welcome to today's webinar, Fraud and Forensics Part 1. My name is Caitlin Mutzelberg from CCIQ and I'm your facilitator for today. Alongside me, I am delighted to welcome Bernard Webble, partner at Alton. An Australian Institute of Criminology AIC report states that fraud costs more than $6 billion per year, which is more than any other type of crime in our society, business or otherwise. This is the first installment of a two-part fraud and forensics series which will help you and your employees become your first line of defense against fraud. Today's e-workshop will cover types of fraud, steps to take to identify fraud, profile of a fraudster, how and why does fraud occur, and what to do when you are aware of fraud. First, some tips to get the most from today's session. We will be online for about 40 minutes, and following the main presentation, there will be an opportunity for questions and answers. Please send through your questions for Bernard using the text box on screen, and at the end of the presentation, we will collate all the questions and Bernard will answer as many as he can. Following the session, we will email all participants a copy of the presentation, a link, and any additional supporting information, so please check your inboxes later today. So now I'll hand over to Bernard from Alton to take you through today's e-workshop, Fraud and Forensics Part 1.
Thank you, Caitlin. And please let us know if you cannot hear me. With a couple of the issues I think we've had with Telstra in the last 24 hours, I'm a little bit wary of some of the challenges we've had this morning in just getting it set up. So if by chance my voice disappears or I'm not clear, please just message Caitlin ASAP. Now, on screen you will see a little bit about who I am and what I am. I've got over 20 years of public accounting practice experience, as well as some government experience, and also over 15 years audit experience. During that time, I've also done a number of jobs, both public audit as well as fraud investigation and criminal investigations. And as we go through today, I will encourage you to please feel free to ask questions. The whole aim of today's presentation is not to sit here and quote statistics and to tell you from the pulpit what the world is like. It is to encourage you to think, to challenge your perspective, and to realise that fraud is something that is all around you. It is something that is occurring on a daily basis to us all, and it's important to understand what is fraud. So you should have with you a number of handouts. I believe you should have the slides for today's presentation. You should also have an infographic on what some of the key points of what fraud is, as well as the handout of profiling of fraud, which we will go through later on in the day or later on in the presentation. The topics then, we'll have a look at what is fraud and what makes up fraud. And it's interesting when you start talking to people, a lot of people don't have a clear understanding of what fraud is, and that's one of the first issues that we always run into. Then we'll have a look at the cost of fraud, and it's surprising how much fraud is a major cost to society. Most people think of it as a harmless crime. We'll have a look at who commits fraud, the profile of a fraudster, and why they commit fraud. And then we'll walk through some of the red flags and talk about some of the aspects and issues or characteristics that you will see common with people who commit fraud. Now, one of the things I will stress as I go through this presentation, this is general information. When we're talking, for example, the profile of a fraudster and red flags, just because your fellow pod dweller or your neighbour next door might exhibit 4 of the 5 characteristics, don't necessarily suddenly jump the fence and say you're a fraudster. These are just characteristics that have been known based on history, research and study. So what is fraud? And the Australian Standard 8001-2008 defines fraud as being a dishonest activity that causes potential financial loss to any person or entity, and it includes theft of monies and other property by employees or persons external to the entity, and where deception is used at the time, immediately before or immediately following the activity. That's a fairly dry definition. The definitions of fraud under the criminal code are more pervasive and is actually more specific again. and has a different scenario, different set of criteria. But some of the key points there to think about is fraud is a dishonest activity, and it causes actual and potential financial loss. So you don't actually have to incur a loss for fraud to occur, but there's potential financial loss. And it can incur through the theft of money or property. It can incur by either employees or parties external to the business or the entity. And it is where deception is used either immediately before or immediately following the activity. I mean, fraud can range from embezzlement and theft of monies through to misrepresentation of oneself for a job or for a qualification. And I mean, one of the things we will touch on is reference fraud, for example. The number of people who apply for a job but pad their resumes with false qualifications, fake job experience, that is, by all rights, fraud. You're misrepresenting yourself. The cost of fraud to society, and this is an interesting slide that was put out. It was quoted in the Herald Sun, but it was put out by the Australian Institute of Criminology, and that was back in, I think it was 2013, if I remember correctly. But what they did was they quantified the cost of various types of crime to the community as a whole, and they came up with drug abuse, for example, costs the community $3.16 billion a year. Burglary, $1.65 billion a year. Sexual assault, $775 million a year. But you can see there fraud costs $6 billion a year. So a lot of people think of fraud as being a harmless crime. It's only a crime against big business or the insurance companies, or it's only a few extra dollars from the government, or it's no one's really worse off by it. But you can see $6 billion a year is the cost of fraud to the Australian community in this representation. And so it is by and far the most significant form of crime that we incur. So who commits fraud? And this is a very interesting one. This is based on the KPMG study. KPMG, PwC, BDO, all the major accounting houses put out various publications on fraud, but the KPMG one is usually quite an interesting one. And their 2013 survey, they found that 3 out of 4 frauds are committed by men, which was slightly up from the 2010 survey, and that may be a reflection of the fact that men are just naturally more fraudulent, or it might also be a reflection of society, whereby, unfortunately, due to the constructs of society, women have not been able to get equality maybe in the workplace. They've not been able to rise up to higher levels of business because of glass ceilings and so on. So areas where fraud can be perpetrated might be dominated by men through lack of gender equity. One of the other aspects we've got there is who commits fraud, in the sense that 91% of people who commit fraud have usually no known history or prior conduct of fraud. 7% were found to have a history that was found out after the misconduct, and then 2% was the fact that people knew they had a prior history, but they employed them, they utilised them, they associated with them anyway. But it's interesting to note that 91% of frauds have no known history. It's also there, the next check, and forgive me about the statistics, but they're fascinating statistics in the sense that KPMG found in 2012, 76% of the frauds were committed by men, by the number of frauds that occurred, but 97% of the value was again by men. So whilst women were committing 24 to 25% of the frauds, they were only recouping or incurring 3% of the value of the frauds. And this again may be simply a distortion of the fact that men tend to populate the higher positions of business due to gender inequality, and as such maybe have access to greater sums of money. Collusion is an important aspect. The survey found that 71% acted alone, whereas 29%, up from 23%, acted in collusion. And one of the key points with this is the fact that fraudsters, if you've got good internal controls, and one of the best internal controls you can have is segregation of duties, where it takes 2 or more people to deal with, say, counting cash or bankings or so on, segregation of duties can help prevent fraud. And that's one of the things we talk about in our second seminar of some of the internal controls, ways to prevent fraud. It's also interesting to know 22% increase in fraudsters earning between 100 and 200,000, and 133% increase between 200 and 500. So these are not people who are earning 30, 40, 50,000 a year. These are people who are further up the food chain, earning good salaries that are committing frauds. And we can see there the percentage of, or the makeup of the fraudsters, 25% of the fraudsters were external, 49% were non-management, 19% were management, and 7% were executives. And you can see there, pardon me, this is the same repeated across time. So you can see in 2012, for example, pardon me, that the number of fraudsters, external fraudsters, has dropped from 34% in 2006 down to 25% in 2012. But senior executive and directive fraud has increased from 2% up to 7%. That may be a reflection that society as a whole is wising up to the risk of fraud. It's becoming more prevalent, it's more discussed. So people always look to external, unknown third parties. They don't trust them, so they try and prevent the fraud. They don't necessarily look at their own employees. When you look at frauds by age, it's interesting to note that under the age of 25, the survey found 0% of frauds committed, so negligible amount of frauds. They found that the key age was 25 to 44, with 50% committed in 2012. They found 24% for 45 to 54 and 26% for greater than 55. So those two key ages of 25 to 44, that middle age point where you've created your career, you've built your dreams, and perhaps they're not necessarily as good as what you expected them to be. You've got married, you've got mortgage, you've got kids, you've got commitments, and suddenly the world's a hard place. And also that age of greater than 55, you're pushing retirement, and you've realised that maybe your nest egg's not going to be as good as what you expected. So that's a profile of a fraudster. But now let's have a look at why commit fraud. And there's a concept called Cressy's fraud triangle. There's 3 components to a fraud. There's opportunity, there's rationalisation, and there's pressure. And it's argued that if you can minimise one of those 3 components, you can drastically reduce the impact of fraud or the potential for fraud to occur in your workplace. So when we're talking pressure, we're talking about the reason that motivates a crime. The individual will have some sort of financial problem that he or she is unable to solve through legitimate means, so they begin to consider committing an illegal act as a way to solve the problem. Now that might be drug or gambling addiction. That might be an inability to pay the bills. It might be, and it's interesting, Christmas is a prime target or a prime catalyst for fraud, because you have the parent who has worked, they've watched the neighbours' kids get excited for Christmas, they've watched their cousins, their brothers or sisters or whatever, but they haven't got any money to buy their own kids presents. So that pressure to conform with society makes them think, well, how am I going to do it? Productivity targets at work is another one. It might be your sales targets. So we might bring sales forward into a month to make it look like they've reached bonus. They might defer expenditure. They might hide stock so that the profitability of their area doesn't look so bad. The obvious one of maintain or improve status. The keeping up with the Joneses. The pushing yourself so that you look like you have a lifestyle that you can't afford. And then there's investor expectation. So I might be a manager of a business that might have external shareholders. I've got to prove to them that I'm profitable. So again, that's the pressure, that's the reason that motivates to do the crime. The survey found in 2012, now these fluctuate depending on what the crimes are and when they're caught, as you can see across the years. But the survey found greed was one of the key factors, 93% in 2010, 31% in 2012. Financial pressure, and it also noted that gambling is not a huge part. Whilst it's easy to, the old stereotype of, you know, the fellow workmate who is keen to play the horses every weekend, between 2 and 11% of frauds were found to be due to gambling, 22% in 06. So they alternate a bit, but gambling is a factor, but not as prevalent as people necessarily expect. A couple of examples just to pull from the newspapers. The Observer, this was reported in the Gladstone Observer for a case that was in Rockhampton, and it was a 36, this was from February 2015, and you don't have to go far to find real life cases. This was a 36-year-old woman, 36-year-old mother of 4, who acted as, her job was as a housekeeper at a hotel motel in Rockhampton. She was cleaning the room one time. One of the occupants had left their wallet in the room. She stole his credit card, and the justification, so the pressure she felt was that she'd stolen it so she could buy Christmas presents for her children. $64 was all that she spent on the credit cards to buy Christmas presents at Target, but she was convicted and she was charged accordingly. Second example is the Sunshine Coast Daily, and this is one where a woman, and again, this woman was 43, so again, we've got the age groups of 36 and 43, so we're in that major target range. But in this case, this woman was the bookkeeper for a not-for-profit organisation, and what she'd done was she stole roughly $164,000, $168,000 from a not-for-profit organisation through 43 fraudulent electronic transactions to her own bank account, mostly disguised as transactions as payments to the tax office. And when she was asked to justify it, hers was a gambling addiction. So again, she was identified as being a pathological gambler, and that was the motivation, that was the pressure in this instance to keep going and to fund it. The second aspect of the fraud triangle is that of opportunity. Now, opportunity basically defines the method which the crime can be committed. The person can see some way they can use or abuse their position of trust or their situation to solve their financial problem with what they perceive to be low risk of getting caught. And that's an interesting point. It is a low risk of getting caught, and that's why a lot of people undertake the crime. Now, it is also important to understand that fraud is a very opportunistic crime. There are those people who plan the fraud and deliberately try to commit a fraud, but then there is a number of people who simply commit the fraud because they were at that right or wrong time and place and they thought they could get away with it. To emphasize or to give the example of this scenario, I want you to think about the example I've now got on the screen, that of John, and this is a theoretical example based on a scenario that I've become aware of, or I was aware of. John's a head chef for a hospital kitchen. Kitchen serves about 1,000 meals a day. Prior to John starting at the kitchen, the hospital would throw out about 5 trash cans of wasted food every day. So John, in the interest of minimising waste, but also in the interest of improving morale for the kitchen workers that he works with, John then allowed his team to share any leftover food. So if there was leftover food at the end of the night, they could take it home and use it for dinner, or they could eat it there. And the challenge I'll give you there is, can you see the fraud risk? And the aspect there, and it's important because we spoke earlier that fraud is about potential loss. Fraud is, you'll remember from the definitions, it's an activity that causes actual or potential financial loss. So what's the difference between what is simply a good old Aussie fair go and what is fraud? You know, John's not incurring any extra cost for the hospital. It is just wasted food that would be thrown in the bin anyway. So all he's doing is just helping his fellow colleagues and saying, look, rather than throw it in the bin, you guys might as well eat it. However, what happens, the extension of this is over the following weeks, they start to cook extra. So they make sure that there are sufficient leftovers for everyone to take home. And then what they might do is they might say, well, look, you know, we'll make enough and then we'll pack lunches for everyone and everyone's mates as well. And it starts to snowball. So there's a fine line between what seems like a reasonable and fair go and what is actually fraud. And this is a scenario that did happen where a kitchen, a commercial kitchen, leftovers, and they started to deliberately make excess food so there was leftovers. I know of another scenario where a kitchen was being ran out of an establishment and the chef there, the employed chef, was actually running a commercial catering business as well as being employed to run the kitchen. So he was running his own business from that kitchen as well. So again, you know, fraud is happening. It is very prevalent in front of your eyes, but often you don't see it because you don't necessarily look for it. The third component is that of rationalisation. Now, rationalisation is often the individual convincing themselves that, you know, they've done nothing wrong. The vast majority of fraudsters are first-time offenders. They have no criminal past. As we said, 91% of identified frauds had no known history. And they do not view themselves as criminals. They see themselves as ordinary, honest people who are caught in a bad set of circumstances. Consequently, the fraudster must justify the crime to themselves in a way that makes it acceptable or justifiable. On that basis, I guess it's important to remember that most people are decent people. You know, it's usually most people will do the right thing and be fairly honest and ethical people. But fraudsters, and especially those that are the first timers, those that are in the circumstances where life's hard, they will convince themselves that what they are doing is not wrong. It might be a case of, well, I've worked here all my years, I've never got a pay rise, he's making more money than he needs, he won't miss it, I deserve it. Or it might be a case of, well, I watch the boss do this all the time, so why can't I? And again, two real-world examples. There was a case on ABC News reported it, and this was back in October 2014, where a Cairns principal, pardon me, a Cairns principal was sentenced over defrauding the government for nearly $3.5 million. And in this instance, the former principal of a school in far north Queensland, what this person was doing, they were basically defrauding, or they were inflating the student numbers at this school so that they'd get extra funding at time of census. And when they were convicted and charged, and they admitted to it, they basically made the statement, and it was recognised in the findings, that not 1 cent of it went anywhere except to the funding of the students. So the person that committed this fraud, the Cairns principal, they did not benefit 1 cent from this fraud. They perceived this as being, the money was being used for a good purpose, that all they were doing was to try and get sufficient funding to be able to improve the educational level of these children. And the children were disadvantaged children, but again, they were doing it through fraud. Again, there's that very fine line of a noble Robin Hood cause and blatant fraud. And also, this is a prime example of how people perceive fraud as being a victimless crime. but $3.5 million of additional funding was allocated to that school that could have been allocated to other schools, could have been allocated to, schools that were in need. So again, fraud always has a victim. The second one there, and this was reported in the Queensland Times, was 6 years jail for a person who was, what they did here, and this is the fascinating, again, this person was aged, it was a gentleman, aged 40 to 43 during the period of the crime, and the principal, by the way, was aged 67. But in the case of the 6 years jail for taking $670,000, this person, he used the money to buy 10 properties who were then rented back to his work colleagues, because he'd seen over the time that his work colleagues were struggling to find accommodation, that the accommodation was extremely expensive. And so he thought he could fix the problem, and he thought he could be helpful to his work colleagues. So he stole $670,000 from his employer, added some money, bought 10 properties, and then rented it to his work colleagues. And that happened over the space of about 3 years. So again, his rationalisation was he was fixing a problem. He was helping people. And again, most fraudsters do not perceive themselves to be bad people. They think they're doing a good job or giving someone a fair go. So what are the most common types of fraud? This is a PricewaterhouseCoopers, and this is a global economic survey, but misappropriations. So that can range from all but theft to inappropriate use of assets. Simple examples. Large employers, they would buy smartphones and iPads. Some iPads, for example, they have, or where they are, laptops. It might be the misappropriation or the use of vehicles. I know of a business, they're a car yard, mechanic workshop type scenario, and they took a very proactive approach about employee fraud. They accepted that staff will try to pilfer some oil or maybe some filters or bits and pieces they'll need because they'll work on their cars on weekends. So they said to their staff, you can come in, we monitor it, fraud head on by acknowledging that it will happen, but trying to be very upfront, very assets like your number, vehicles, 2, 3, 5, whatever. But what have been driving? They can where we look at one where the fuel that went onto a fuel card for a particular car was sufficient to fuel, I think it was about 3 to 4 cars during the year. So obviously they were using the fuel card to fill up the wife's car or the neighbour's car or the boat. So asset misappropriation is huge. Procurement fraud is also another major crime. And simple examples are here, and I can think of one, this was touched on by the former parliamentarian who was charged, and I think he was later acquitted, but the scenario where a supplier to the union, I think it was, had given him a credit card to use. So in that scenario, he would purchase his products from the supplier would give the person a free use of a credit card, and no one knew about it. That's a form of procurement fraud, where there's a kickback to a supplier. And I might have my details wrong on that, but that's my rough recollections of what the scenario was there. But where you have a purchasing officer, and that purchasing officer might get a kickback, might be free tickets to the football, might be an expense account at a hotel, But what happens is that purchasing officer then purchases all their equipment or their stationery or that through that particular company. That company obviously charges more for it than they might get from elsewhere so that they can reimburse the purchasing officer for the costs. Or another one that I heard of was a butchery, and this is a small-scale butchery, but the butcher was basically told by a chef at a kitchen, you give me an invoice for $1,000 a week, or whatever the amount was, you pay me 80%, I'll give you 20%, and I'll make sure that invoice is paid. No products ever supplied. So again, procurement fraud. Bribery and corruption is an obvious one, and it's a very prevalent one, especially in the public sector. And the other two that are interesting there is obviously accounting fraud. And I mean, that is a fine line of interpretation between what is fact and what is fiction, but then also cybercrime. And that 24% of the frauds or the crimes identified were cybercrime, and with the march of technology, that will only increase. Because it's interesting to note, technology and fraud, the amount of frauds that are happening nowadays, identity theft. A simple example of an identity theft I can think of is when a friend of mine shot me a Facebook request. And on this Facebook request, they wanted to become a friend of mine. And I remember at the time, I thought that was odd. I already thought they were, but it was the same photo that this person had been using and all that. I didn't check if I was still a friend of theirs, so I just thought, oh, well, they must have somehow disconnected and they're resetting it up. I accepted. And then this person, it was actually the wife of a friend of mine who I hardly talked to, then this person started talking to me, saying, oh, how are you? What's happening? I told them, I said, oh, yeah, this, the kids are doing that, the world's okay. We had a little bit of a polite conversation, and then they said, oh, have you heard about the poverty rebate? Which made me think, what is this? And they then sent me a link, click on this, it'll tell you more. And what had happened was this person's Facebook, it wasn't even their Facebook account that had been hacked, but a fraudster had set up a false Facebook account. They'd harvested the photos of this person's original Facebook account. They'd set themselves up as the person and was then going through and contacting the friends list of this person. So they'd assume the identity of the individual through simply taking their photo and setting up a Facebook account in their name. They'd contacted all the friends of the individual, and they were then trying to commit fraud against the individuals. So, and Facebook is notorious for identity fraud, and it's always one to be careful of. Definitely check your privacy settings with Facebook and all your social media. It's amazing when you think about what we do put, or what you see people put up on social media. It'll be photos of family, it'll be photos of kids, it will be history of where they've travelled, places that they are working, what they are doing. It does not take much to then assume that identity by identifying who they are, where they've been, what they do. You can identify where a person works. You can even start to stalk them and identify who they are, what they are in real life. Other aspects there is also photos. A lot of photos carry a lot of geotagging. And so the metadata in the photo allows you to identify exactly where that photo was taken. So it might be a simple photo of a meal, but you can geotag or pull down the metadata to identify where that photo was taken, and the assumption is you then know where that person is within the last hour or two. Ransomware. And ransomware is also a major fraud issue at the moment. This is scenarios where you will receive an email or a link. You'll click on that link, and what that does is it will download software, malicious software, onto your systems that will then freeze your systems, will lock it up unless you pay a certain amount. And the amount is usually enough that it's small enough that you think, oh, I might as well pay it and get it fixed, but it's not large enough to be cheaper to reconstruct your data. But it will log it up. The ransomware targeted a number of medical facilities about 2 years ago, and it regularly goes around. I know our firm got hit once, and in that scenario, and often a lot of your virus checkers and your firewalls will stop emails, will stop virus-based emails. But in this instance, what it was, one of the employees who just moved from out of state got an email pertaining to be from the main roads of the state they'd come from, saying that they still had an outstanding motor vehicle ticket. This employee, thinking, oh, have I? Clicked on the link. Simple as that. It directed to a third-party website that then goes around the firewalls and downloaded the software. So you've got to be careful with what your group policies are about downloading or enacting software. You've got direct denial of service attacks. You've got theft of intellectual property with bring your own devices. And this is probably a very important one. In the modern workplace, more and more people are bringing their smartphones. They're bringing their own iPads. They're bringing some form of music. They will have all sorts of ways to be able to carry data, collect data, transport data. So with the prevalence of people bringing their own devices, you've got to identify how is that data being carried through? How is that integrating with your own policies? We've got social engineering that does occur, whereby people are rebuilding what you do and who you are online. You've got drive-by downloads, where you might go to what looks like a legitimate website, but whilst you're there in the background, malicious software is downloaded. And then you've got the good old spam and the phishing and all the various forms of danger. So I think it's very important to understand that technology and fraud. Another simple example, and this is one that's I'm very aware of because it happened to my dear old mum. And older people are very susceptible to it. In this instance, she was having problems with an iPad. She rang Telstra. Telstra said it's not their problem, referred them to somewhere else. I think she ended up spending 6 hours on the phone that day. She ended up talking to a business in India that convinced her to pay $400 or $500 for the honour of downloading software onto her computer, cleaning up their computer, and they then had access straight into her computer. Now, when we said to her, look, you need to stop that and change your passwords, the first thing she did was open up her computer to try and save her new passwords so she could write them or store them there. And with things like keyloggers, which records the keys that you use as you type on a keyboard, anything you save to that computer was automatically saved somewhere else. So it is very, very easy to be convinced that what you're doing is right when perhaps it's not. Now, one of the handouts, attached to your handout, is the profile of a fraudster. So what I would like to do in the next 10 or 15 minutes, pardon me, is just talk through some of the profiles of fraudsters, the red flags as such, and just encourage you to think about some of the aspects that you see or some of the things that might trigger or flag either in your own workplace or in your own personal life. And you'll see there, for example, some employee red flags, unexplained employee lifestyle changes, living above their means. A beautiful example, and you know, everybody can say, look, big business is safe, small business is not, but one of the most beautiful examples you can think of is the Tahitian prince. The gentleman who convinced his work colleagues in the Department of Health that he was a Tahitian prince and that his lifestyle was funded by his family heritage and not by the 14 million that he'd managed to defraud the Department of Health from. And this is a government department that should have cutting-edge fraud prevention techniques. So unexplained employee lifestyle changes, significant personal debt and credit problems, refusal to take annual leave and sick leave, and that one is a huge one. Often controlling people, fraudsters will be controlling people who won't want to let others take control. They will portray themselves to be as irreplaceable and that they can't afford to have a day off because no one else can do their job. So people become convinced that no one else can do their job, so no one understands what they do. Another example I can think of there is, and this was one out of an American case, where it was a admin clerk for utilities, for an electricity company, I think it was, electricity or gas or water. And what they did, they worked in the debtor billing area, and they had about 4 or 5 clients where when the accounts were run every month, they would pull the invoices, or this person would pull the invoices. She would manually alter the invoices. So if the invoice for client A was $2,000, she would then manually alter it to be $2,500. She would pop the altered invoice into the mail, and then what happened was this woman had to go to a funeral, and so she had to go away for a couple of days, but she'd said to her replacement, if this person, this client, or this client pays, just put them to one side, as I have to reconcile their accounts, or there's a problem with their accounts, or whatever. And funnily enough, while they were away, one of them did pay. And the person that was replacing thought that it's a bit odd, had a look. What this person was doing was, whilst the original invoice was $2,000, she would send out an altered invoice for $2,500. When the payment for $2,500 came in, and in those days it used to come in by cheque, would come in, she'd put the cheque to one side until there was an extra $500 cash in the bin. She'd take $500 cash out, bank the $2,500 cheque, all the client's records, all the accounting records balanced. No one was any wiser. And it was in an area, because it was utilities, it was gas or electricity, the client never reconciles those bills. Almost everybody, I would suggest, will get an electricity bill or a gas bill, and they'll just look at that and go, I'm paying too much, but they won't understand what they're paying for. So they just automatically pay the bill. High employee turnover is always a good one. Lack of segregation of duties, and that's coming back to what we were talking about with that admin example. Cash at the end of the day should always be counted by 2 people, or someone clears the till, someone does the banking, 2 separate people, and discrepancies should be looked into. Unusually close associations with vendors, with customers, that's always a good one. If you've got a supplier, if you've got a purchaser who has a great relationship with a supplier, just keep an eye on it, just in case they're getting a bit of a kickback. Or if you're using suppliers that are family friends of some of your employees, keep an eye on the relationship. Past employment problems are also another usual red flag. But what about management red flags? So perhaps management's reluctant to talk to auditors if there's auditors. They want to play games. Perhaps there's a dominant individual, an alpha personality who won't let anyone else query or question what they do. If there's weak internal control environments, so there's lack of reconciliations, lack of documentary proof. Maybe there's frequent changes in banking accounts. Maybe things seem to be more complex than they necessarily need to be. What about continuous rollover of loans? What about, again, high employee turnover? Again, compensation programs. So wages are not really market, are not normal to what's happening. Again, lack of vacations, or creditors or collectors appearing at the workplace. And that's actually a very good red flag. And that's a very common one where an business owner might say, look, I don't know what the issue is. I'm paying all my bills, yet for some unknown reason I don't have enough cash. And I'm having people say that I haven't paid them. Often, if there is a lot of confusion, so you might have an accounts clerk or an admin person who is a lovely person. They've been there forever and a day. They're trusted like nothing else. But they just seem to not know what they're doing. Often, the biggest fool can be your smartest thief because they will make clutter. They will make smoke and mirrors to hide issues behind. Payroll red flags. Now, payroll, if you're going to get hit for fraud, payroll is a major area or a major risk of fraud. There might be excessive overtime. It might be that timesheets aren't being signed off or authorised. Might be that Holiday leave is being abused. Sick leave is obviously always an area with fraud. Reimbursement of expenses for employees is another one. Another prime example, or a very simple fraud that I find quite amusing, is that of travel reimbursements. So if you've got an employee, if you allow your employees to go and buy the flight tickets, go and book the hotels, but then get reimbursement, that's a fraud risk. I heard of an example of what would happen. The employee would go and they might have to fly from a regional town to, say, Brisbane or Sydney. They would go and book, and they might book the $500 or $700 expensive flight, saying that no, there was no other flights available. They book it, they print out the receipts, they print out all the tickets. What they then do is they cancel that and have it sitting as a credit on their account. They then go and book the $200 flexi flight. They keep that as their actual flight and they fly on the flexi flight, but they then go and claim back the $700 for the more expensive reimbursement because they've got all the documentation there. And so they walk away with about $500 from the employer fraudulently. They've got a extra $500 sitting there as a travel credit for their next flight. They do the same with hotels. They book the hotel on their credit cards. They incur the costs or incur the paperwork to look like they're incurring the costs, but then cancel it, or they downgrade it to a cheaper room. And the good old ones about, the old meal tickets and different things where, the employee and 4 of their mates go out to dinner, but they get it written up as one meal and they claim that back. So don't be afraid to query or question when it comes to employee reimbursements. Accounts receivables or debtor fraud. Again, and I know this can be kind of boring in a lot of respects, but it's fascinating when most people glaze over and go, it doesn't happen to me, but it happens to everyone. Fraud is so much a part of our modern culture, and we are all tickled in some way. The banks identify fraud and accept it as a business risk now with credit cards and with banking accounts. But with debtor fraud, again, reconciliation is one of the keys. So where your debtors are not being reconciled. So you've got a debtor on your account that is now 3 months, 6 months out. Why has no one chased it up? Why has no one recovered the debtor? Where you've got credit notes being put through regularly to write back bad debts because the argument is they were overcharged or they were incorrectly charged. And what that might mean is someone's actually pocketed the money and then it's writing the debt off in your books. There might be credit levels. So if you've got a credit level for an employee and they're being overridden or they're being corrected, it might be a mate helping a mate. And again, some of the things that they do there is they might set up an account, then they might tickle the credit limit, run up a big account, knowing they can't pay it, then they skip town. Again, missing documentation, false invoices, they are also key red flags. Another one for creditor fraud, or for debtor fraud for that matter, is where there's insufficient details. Like someone sets up an account, but there's no genuine addresses, there's no phone numbers, people aren't doing credit checks. People are scared to do credit checks, but credit checks are important. If you're going to set up an account and give someone $50,000 or $20,000 credit, because that's effectively what happens when they buy their product and they don't pay it for a month, then have you rung 1 or 2 of their other suppliers to confirm that they're good payers, that they're genuine people? And going back to employees, resume fraud, I think we spoke about earlier, is also another major fraud. People don't necessarily do reference checks or police checks because they just think, oh yeah, that's right, I don't have time, whatever. I mean, we've seen the government, the number of cases where doctors for the public health system have been brought up on the media on the front page of the paper for pretending to have credentials that they don't necessarily have. People who have come along and said, I've got this degree from that university, when they don't have it. You've got your revenue frauds or revenue red flags, which again is variations in revenue. There might be some manipulation of revenue, timing of revenue. You've got your corruption red flags. There might be, and again, simple ones here is if you've got a business and there might be consulting fees. It might be excessive consulting fees. So if you're an owner and somebody else is responsible for different parts of the business. And you see one area that's got excessive approved consulting fees. Well, what are they for? And then you've got the other common types of frauds that we've got there. You know, the fake timesheets, the theft of cash or equipment or tools, forgery to state the obvious, lapping or kiting. And I know check kiting, for example, I was talking to a director of a regional bank, and one of the scenarios they are aware of and they have suffered before is crime families or crime gangs would go through a particular region and do what's known as dumpster diving. They would go through dumpsters or would go through people's boxes. So they might go to an apartment block which has 100 letterboxes, and they'll jimmy them all open, and they'll go through the mail. They'll look for tax checks. They'll look for dividend checks from perhaps Telstra or Commonwealth Bank, major payers who are not likely to default or are guaranteed payments. And what they'd do is they would take the check, and so let's say it's a tax refund check. Let's say it's for $1,200. They might alter it and make it for $12,000. And they're very good at their fraudulent activity. They make it for $12,000. They might change the name on it subtly. They will have an account set up in that person's name, so they might try and do a little bit of identity fraud, or they might change it to a name that they've already got. And then what they could do is they'll give it to the grandmother or some harmless victim who'd go in there. They'd go to deposit the check, and then what they'd say is, oh, look, it's pension week, or it's, you know, I need this money to buy food for my dying husband or whatever, and they'd convince the teller to let them draw on this check. They might draw $3,000, $4,000 out. The bank takes 3 to 4 days to clear the check. The bank finds out that they've got a $1,200 check as opposed to a $12,000 check, but they've already given out $3,000 or $4,000, and this family skipped town, or this entity has skipped town. And so they are harvesting money in that way. Pocketing payments on customer accounts, that's always an important one. Not depositing all cash receipts. I mean, there's another great example with Brisbane City Council from about 10 years ago, where when they used to have the old parking meters that you'd put the 50-cent coins in, and that the gentleman, I think it was, that was collecting would empty the parking meters, was skimming off the top. And I think he'd made, from just collecting coins from parking meters over the years, we're talking hundreds of thousands of dollars. He had a massive wine collection. So again, when you look at the red flags, you've got a employee on a average to normal wage, but has got a high level wine collection that his colleagues may or may not have been aware of. That just seems unusual. Where's he getting the funding from? Paying personal expenses with business funds, and that businesses should always, personal and business should always be separate. You've got a whole heap of recording fictitious transactions, conflicts of interest. So I guess to wrap up, there are a number of red flags. There are a number of profiling aspects that, again, are general in nature, but I want you to consider and think about as you go through your day-to-day, because one of the key points is, and as I wrap this up now, one of the key points is fraud is everywhere. We are all subject to fraud. We will all incur fraud. We may not be aware that we are a victim of fraud. But unfortunately, fraud is one of those crimes that people don't talk about. It's one of those things where if an employer has a fraudulent employee and they're aware of it, half the time they don't take them to the police. They don't want the embarrassment. They don't want the hassle. Their view is, I've already lost $10,000, $12,000. Why do I want to pay another 5 or 10 to get someone in to do a report, to do a review, to simply get this person charged when I won't get that money back? But the issues are, all that they are doing is they're casting that employee out and then making it someone else's problem. They're not necessarily getting that process. So I have a belief that fraud should have a zero tolerance. Fraud should always be reported to police. Fraud should always be prosecuted. Otherwise, it just keeps snowballing and they move on to the next place. So at that point, I would probably encourage Caitlin, if anyone's got any questions or queries or any discussions from that point.
Thanks, Bernard, for an informative presentation.
Are we there, Caitlin? Hello.
It is now time for our Q&A session, so please send through your questions for Bernard using the text box on screen, and we will answer as many as we can in the remaining minutes. All right, we've already had a couple come through. If 91% of frauds are committed by people with no known history, then what is the point of doing reference or police checks?
That's a very valid point about the fact that 91% have no known history, but it's exactly that other point. It doesn't mean they haven't committed fraud before. Half the time, as I said, a number of employers, rather than prosecute the person, will simply say, well, you pay me back the 10 grand now, you quit tomorrow, the whole thing goes away. So it's important to talk to former employers. It's important to understand why there's a gap in a resume, because it might be that that employee doesn't want to talk about that business or doesn't want to identify that they've had a problem at that point. And so that's why police checks, employee reviews, contacting former employers is very important still. It's not that 91% haven't had a prior fraud. It's just that 91% have no known history of prior fraud. So I hope that answers.
Thanks, Bernard. Got another one here. Should we be talking about fraud with our employees and work colleagues? Doesn't this just encourage them to commit fraud?
Oh, look, absolutely we should be having the discussion about fraud with staff, with everyone, to be honest, because the more we talk about fraud, the more that colleagues are aware of what fraud is, and the more that there is a clear understanding of what the rules are, then the more that fraud can be prevented. Half the time people don't know what fraud is. They don't fully understand that a fraud is something that, to one person it is just simply a good deed, but to another person it's fraud. So if you talk to your colleagues, or if managers or owners talk to their staff about fraud, about their view on fraud, it might be an interesting conversation, because it's surprising. People often come and go, well, yeah, I've seen so-and-so do that all the time. Or, yeah, in my last job they did this and I saw that. And so it also means that, a workmate might look across the table and think, hang on, you shouldn't be doing that. And that's often how fraud is detected too, by people just simply paying attention. So absolutely we should be having that conversation with fellow workmates and colleagues.
Thanks, Bernard. What can you do when fraud has happened to you or your company? When you know who committed the fraud, how can you be compensated?
It's a hard one. Fraud is a little bit like the iceberg to the Titanic. You can see it, but you don't necessarily know how deep it ran, how long it went for, or what was happening. One case I know of, or I've heard of, is where it was a construction company, and unfortunately in this scenario it was a clerk who was procurement fraud, and what was happening in this case was they were basically being charged, or allowing a supplier to charge for a product that didn't exist. They were false invoices. In this instance, a particular product, a particular house might have had like 14 driveways, because they were allowing the invoices to be raised, they were charging it to a house that had been closed out, everyone was paying it. When this fraud was picked up, the employee kind of guessed that they'd been found, but they didn't do anything about it. Well, they did a lot about it, but they owned up to the ones that they could identify. They would not incriminate or say, yes, I did others, or I did this, or I did that. So the challenge with fraud is identifying the scope of it, how it happened, identifying when it happened. The other issue is white-collar crime, unfortunately, does not get the resourcing at the police level that is probably its due. Partly, and I don't blame them, this isn't the criticism of the police, because I'd much rather them be out there capturing the murderers and the burglars as much as the bloke that's ripping me off at the checkbook. My life's kind of more important than my bank balance. But you go to the police, you report the police, and especially in a regional context, often they will tell you to perhaps have a chat with your accountant or a forensic accountant so that you can quantify exactly what has happened, and you then need to go back to the police accordingly. You need to also be aware of your HR rules. You can't march onto the floor and go, you're a fraudulent person, you've stolen from me, now you need to do this, this and this, because you also run the risk of an unfair dismissal or some form of accusation. So probably the best bet, if you become aware of fraud, or a forensic accountant who can help guide you in quantifying what it is. You may need legal advice or HR legal advice so that you can manage the minefield of how to manage that particular employee. And you may then, in relation to compensation, often you won't get the money back. There may be mechanisms where the employee will remunerate for their thefts. There may be perhaps under your insurance policy. Some insurance policies do have employee theft or fraud as an insurance policy clause. So maybe check your insurance policy to see if there's any mechanisms there as well. But the main thing is, as soon as you become aware of it, seek professional advice so that you act in the right steps.
Thanks very much, Bernard. That's all the questions we have time for today. On behalf of CCRQ, I'd like to thank Bernard from Alton for taking the time to present to us today. I'd also like to thank everyone who has joined us for today's session and for your patience with the bit of the lag we've had from the Telstra connection or outage from yesterday. If you have any further questions for Bernard, you can contact him using the information provided in the email later today. Don't forget that CCIQ has a range of webinars and events coming up over the next month or so, including Why More People Don't Do Business With You on the 19th of February and Merchant Beware on the 23rd of February. Also, don't forget to join us for our Fraud and Forensics Part 2 e-workshop on the 3rd of March. If you want to find out more about upcoming e-workshops or webinars, go to the CCIQ events page to book your place. Thanks for joining us today. My name is Caitlin Mutzelberg from CCIQ, and I look forward to welcoming you to another CCIQ e-workshop in the very near future.